All right, cool guys. Welcome back to another episode of the State of E-commerce. This week, Ben and I are joined by Yoni of Getida, a longtime friend and partner of Payoneer. Yoni, how's it going?
Good. Hi, everybody. Welcome to today's event.
Yeah, of course. So, guys, a little bit of a background about Yoni. He's the COO and co-founder of Getida. He began developing Getida after successfully operating a $20 million a year Amazon FBA business, selling different fashion brands internationally. Specializes in e-com discrepancy analytics and consulting. Getida themselves, focusing on discovering and managing financial and inventory-related discrepancies with billions of dollars transacted annually. Yoni himself also comes with a bit of military intelligence experience, having served in the IDF, Special Navy Intelligence. So I feel like we got a little into you personally there, but Yoni, thanks for joining.
My pleasure. Always, fun and great to be with you guys.
Cool. So I know we have a lot to talk about. So Ben, why don't we just jump right in?
Yeah, of course. Thanks, TJ, and Yoni again. Thanks for joining us. So let's just go ahead and hop in. I know you, were a seller previously, and now are co-founder at Getida here and launching companies to help sellers and help them grow and build their businesses. So with that, I'm sure you've seen a lot over the past few years, and specifically the roller coaster that's been 2020. So it's just hoping you can shed some light on your thoughts on 2020, kind of trends you've seen, maybe whether it applies to the clients that Getida has or just the industry in general.
Got it. Yeah. So definitely, I think on my perspective, in my experience this year, I think it's really a historical year for e-commerce and particularly for Amazon sellers. I think many sellers are breaking all-time records, including Amazon themselves, just on a high level. Amazon this year is going to grow roughly about $100 billion in revenue. So last year they did about 280 billion. And they're expected to close this year by another, 100 billion. So it's going to be around 380 billion. Just to give a little bit of context, it took Amazon about 22 or 26 years to generate the first $100 billion in annual sales or revenue. So just to show you what took 20 plus years to them to make, in 1 year they did in this historical year because of the COVID momentum. Essentially, consumers in the United States were strapped at home. They couldn't go anywhere, and they had pretty much no other choice than shopping online. And Amazon was the main destination. So I think this also threw a lot of new layers of consumers who never used Amazon before into the mix, and many of them are from more senior population. It could be 60, 70, 80 year old plus people from the population where they have money, right? They're established, and now they're just getting hooked. And so I think this also brought in a lot of new money into the game, and it's going to bring a lot of new opportunities to the sellers. But of course, because of all this tremendous hyper growth, things were just crazy all around. And can you imagine all this growth happening with all these restrictions happening all at the same time? So it's kind of a counterintuitive. The whole industry is exploding up, but Amazon is narrowing your ability to do business. And how did that manifest? So we all know, right? At the heat of the moment, I think around March and April, when the pandemic was hitting, Amazon said, you know what, for many categories, shut down. You can't ship your products into FBA to the fulfillment centers. So it's only limited to a few crucial categories, most of them involving personal protection equipment, PPE. And then once that kind of lasted for a few weeks, they started opening up again, but they didn't fully open as it used to be before. They started limiting every ASIN, how many you can send for each ASIN. So if you got used to sending in every 30 or 45 days, I don't know, 2,000 units or 10,000 units from your ASIN, you can only send in like 200 units. So you really got to drip it in. Makes it very, very painful for many. So, quick sellers and top level sellers, they had to pivot quickly into these new conditions. And the lessons for that were, of course, if you were only relying on FBA, you had to have secondary layers, right? You need to do FBM, fulfilled by merchant. So either you get your own place, right? So you get your own team, so you can fulfill orders as they come in and ship it to the clients. Or you find a 3PL center that can help you not just ship to FBA, also ship to the consumers. So you got that as well. Or if you're lucky enough to have a good matrix, you can maybe do SFPs, sell fulfill prime, which means you use your own fulfillment center or 3PL center, but you get the badge, so it makes it look as if you're selling from Amazon Prime itself. Sellers who pivoted quickly, they benefited tremendously. They were growing explosively. The ones who did not pivot on time or too overwhelmed, they probably could have sold more. They probably sold more anyways, but they could have gotten even much more if they had the infrastructure set up in a good way. But there's a little bit of the ones who were on the wrong side of the coin, were the ones who were, let's say, if you're in the travel industry, you're selling luggage, that probably took a major hit, simply because people are not really traveling anymore. So summarizing the year, there's a lot of crazy turbulence that happened. For the most part, it was positive for most of the sellers. Some of them landed on the wrong side, but if you landed on the wrong side, at least at the early beginning, but were able to reinvent yourself, you probably found it to be a great opportunity to rise. And that's kind of how we see the things happening throughout this really historical year.
Yeah, I mean, a lot to unpack that. And I think it has been just unprecedented, the challenges and the struggles that e-commerce sellers have had, and the tenacity sellers have had to have to either pivot if their businesses are on the decline. You said it, with categories that they're not selling in, or really diversify their businesses on the supply chain. So kind of talking more about the supply chain, what have you seen is, as far as 2020, that, things that have worked well for sellers or things that haven't worked well for sellers? And, as we get into here to the holiday with, the volume that everyone's expecting, and one of the largest holiday seasons we're all expecting, what do you expect sellers to do, or actions they can take to be successful?
So in terms of sourcing, also created a big shockwave. I think the shockwave for some sellers started at the end of last year, when China was actually experiencing the heat, the height of the pandemic on their end. So it kind of disrupted the supply. But then when it lagged into domestically here, it created tremendous pains. I think many sellers try to, I guess, handle the situation in a few ways, right? If it's hard for you to get your supply on time, it just takes longer. So I guess one common sense reality is that if you used to buy a stock for for every 30 days, 60 days, or 90 days, now you might need to start buying for every 4 months, 5 months, or 6 months supply, as opposed to 1 to 3 months supply. You just buy more. Why? Because it takes so long. So if it takes so long, might as well buy as much as you can, get as much as you can, and have it in I guess domestically here in the US if you're sourcing from overseas, and then you drip it in either through FBA, which is what we discussed, or you have that FBM component. By the way, if you do have a good FBA component, Amazon is obviously a great marketplace, but I think many other sellers use the opportunity to grow into other markets. Right? You have eBay, you have Walmart, tremendous growth on Walmart going on right now and this year. So sellers that play these cards correctly probably did very well. I think many sellers are looking into how do you source more domestically or closer to home somehow. If you're sourcing from China and India, maybe Mexico or Central America or South America are a viable option for you. Depends on your categories. If you're even here, if you're I know like a lot of brands here in the US, they do domestic production, especially when it comes to like lotions and cosmetics. These kind of things you can still find good pricing here in the United States. So I think that probably grew more. Or if you try to do it a bit closer, so if you're based in New York and your suppliers in the West Coast, there was pains there, you try to look for somebody a bit more in the area, the regional, and vice versa if you're on the other end. So many sellers are started to look at the world that as globalization is deglobalized. So everything, everybody worked hard, so hard for the past 30, 40 years. They had to kind of second guess it and see, okay, globalization is great when things are normal, but what is my contingency plan when things go wild? If pandemic or whatever it is, it can also be politics. By the way, right? Before the pandemic, there was the trade war with China. So many of the sellers got hit with the 25% import tax. So what happened before the tax kicked in? Many of them bought as much as they can before it comes in the tax, so they don't have to raise the prices or delay it as much as possible and roll it into the consumer. So that was something that was happening before the pandemic. But inside the pandemic, sellers that are finding that sourcing is just harder, they just need to buy more, and that gives birth to another problem, right? Funding. What do you do with funding?
Right.
Yeah.
Right.
So I think before we talk about funding, there was a few great points you made there, and I think the first one is on Amazon. How a lot of searches start on Amazon, and Amazon has really become, the default search engine. I would say even overtaken Google, as we've seen reports. And I love that you touched on Walmart too. Some of my experience and really what I like to read about is the dominance of Walmart coming in as, the second marketplace, and frankly trying to take the crown from Amazon. Because I think we can all agree here that Amazon is the top. They really are the gold standard for selling and purchasing online with the marketplace. And one of the interesting statistics I read this past week was eMarketer put out a stat that, if a customer can't find a product on Amazon, 40% of them immediately go to walmart.com to look for that product, which
Wow.
for me, I think is just a testament, of how the marketplaces are growing, how consumer, habits, as you mentioned too, are shifting, where we're getting older generations who are looking to purchase things online, or those who are just becoming more savvy and understanding, that if I can't go to the store because, COVID is spiking, or in my area, it's, stores aren't accessible or things are closed down. Consumers really take advantage of all of e-commerce.
Yeah, I want to add to that. I think just a very short, a few weeks ago, Walmart has officially surpassed eBay. The original godfather of e-commerce. So now eBay is third in line. So that historical moments for Walmart also, as they tail Amazon. And if anybody really has the muscle, the intent, the resources to really give Amazon a run for their money, it would definitely be Walmart. Just to give more perspective to the audience out there, Walmart is still, in terms of revenue, larger than Amazon. They do over half $500 billion in revenue, or over $500 billion annually in revenue, and Amazon is doing roughly 380 billion, as we discussed. But it will be interesting to see if fast forward another year, if Amazon is able to grow another 100 million, which will be I just hold my hands up and say, how is this possible? From 280 million, you grow another 100 billion. That's a 30% growth to such a large body and organization. It's tremendous. And if anybody plays in the stock market, they probably made a lot of money as well, because just the stock grew I think 70-80% since the beginning of the year. So how much more can it grow? Big unknown. It's going to be an exciting battle between the titans. But if you're selling on Amazon, you're in the right space anyway. You don't have to invest in the stock. Invest in yourself. Invest in your consumers, whoever you're targeting your products for, and the utility of your product, and you should do just fine.
And Yoni, I think you made a really good point before about companies and businesses needing to pivot so that they don't fall, right? So to look at different alternatives, and it's going to lead into the point you were saying. But when you are sourcing products, whether you have to buy more because the lead times coming from overseas, or if you're turning to domestic items, maybe in the U.S., and maybe those cost a little bit more for production, but that as a U.S. made product, you can potentially charge a little bit more. All these are great issues or great situations to be in, to have options. But when it comes to options, you need usually money to push that behind. And you were alluding to that before. So in terms of what that looks like, how would sellers deal with cash flow issues? Because we know that every seller will turn around and say, "Yes, I need cash. Yes, I'll take cash." But aside from inventory, which we talked about, what are some of the other use cases that you've seen sellers use additional cash, and how do they get it?
Got it. So I can share from my own experience, throughout the years, just
Sure.
some background experience, story. TJ already kind of shared it at the offset, but in my past, I used to run an Amazon selling business, and we were doing over 20 million a year in annual sales. And it was very hard for me to speak with conventional banks and explain to them what we do. We sell on Amazon, we do FBA, and we want to grow, we need funding. And it was very hard for them to eat these nuts, right? This nut called Amazon. How do you break it in? How do you eat it? And it was very, very challenging to get normal funding from traditional commercial banks. So the alternatives were, I remember back in the day, we had Cabbage. It was pricey. It was, a 6-month loan, 9-month loan, and a 12-month loan. I'm talking about, this is like around 2013 or 14, early on. Today, Cabbage has been purchased by, I think, American Express. They just bought them. And then at some point, Amazon introduced Amazon Capital lending, which was also very similar to the Cabbage model, but Amazon charges from your deposit. But today, I think there's great more options coming in, which is more competitive. So what you want to look out for when you're selling on Amazon, you're looking for funding. Obviously, the APR needs to be you have to really put it into Excel file and say, okay, I'm going to pay all this money to get this money, which is my APR, my percentage, my interest, but how much am I making? So make sure, first of all, you're profitable, and the money you're going to take on yourself, this debt, this liability, you're going to invest it to a place where the profit you're going to gain and generate is going to surpass what it's going to cost you. Because if you're going to do your numbers and you're going to see, hey, I'm going to take in all this debt, but I'm going to make maybe even less, or maybe lose money, whatever it is, don't do it. That's just the opposite, because then you could just might be digging yourself a hole. So word of caution there. But of course, if all the numbers are playing it right, take a risk, take debt. It's positive because it's going to fuel you. It's going to fuel your growth and fuel your profit. So paying for that money should not be an issue, and you can deduct it anyways. I know that you guys are rolling out, already rolled out this year, a great option. Cash advance. The sellers can get 60 days, 90 days worth of their Amazon deposits. I think you guys give up to 250,000 instantly, which is crazy. Just like that, there's no collateral because you guys really see and understand the numbers. You guys are unconventional to begin with in a positive way for Amazon sellers, because you are in the game. You just understand what the needs are, what the structure is, and you see that there's healthy business, healthy deposits coming in. Based on that and some other criteria, you're willing to lend a hand and do it at a competitive rate. And once you can have that in your toolbox, seize the opportunity and grow your business.
Right, and I think just to add a little point to that, and when you talked about the cabbages or the Amazon lending, and one of the real value, and I think the most important thing about the Payoneer Capital Advance program is the repayment terms. And we come from a point where we understand Amazon, and then we got into this working capital solution. It's not like we were in the lending space and now serve Amazon. So where our product came from was a seller's best interest, and where we take a percentage of each disbursement from Amazon is key. Your business has natural ebbs and flows when selling online. You could stock out, like we're talking about. You could lose the buy box. You could get black hat attacked or whatever it might be. There's so many variables where if you are set in a traditional loan, you have to pay 25K a month or whatever it is. You might be really stuck if something happens to your Amazon business. So from a Payoneer perspective, we're at least super cognizant of that and are willing and able to work with it.
So basically, we're saying it fluctuates. So instead of having a fixed rate, which you got to pay, it fluctuates based on your revenue, correct?
The rate will be the same. The rate you agree to up front is never going to change, no matter if you pay it off sooner.
The rate is the APR, right? The interest.
Correct.
Yeah, that's right.
But in terms of the payment amount, what you pay each disbursement from Amazon, that's going to vary depending on what you like that pay period.
That's great. Yeah, flexible.
Yeah, so really there to work with sellers, exactly as you said. From your experience, where if you see the growth potential, maybe you've worked it out on paper, and you say, man, if I just had the influx of XYZ cash every single month or quarter, whatever it may be, I can grow and exceed my growth goals for the year. Which again, is an important thing for sellers to start to visualize and put down on paper as we head here into yet again another unprecedented year in 2021.
Yeah, great opportunities all around.
So with that, speaking about 2021, can you tell us some more about, I know we were talking a little bit about this before, but some of your predictions for what you think this holiday is going to look like, and then what you really think 2021 is going to look like for these e-commerce and Amazon sellers?
Yeah, so definitely Q4 holiday season is going to be probably all-time high historical by all means. So hopefully everybody's clutched in. I mean, we're talking a week before Black Friday is going to hit in. So anybody listening to this right now should be locked in and loaded like crazy. All their goods are in FBA or their 3PL warehouses or their own warehouses, and they're ready to fire the bullets. It's all already in the magazine. So hopefully, if you have it all locked and loaded, hopefully you have a good explosion, a good attack. Close the year strong. I would recommend, whatever level of a seller you are, have good books and in place. Know your numbers, know your profit. I can't stress this enough. I always talk about a delta, a triangle that I always look at, or every seller should look at. Know your revenue, know your cost of doing business, right? And what's the bottom line? How much money you're making in profit? Because if you're just making a lot of millions of dollars of revenue, you have no idea how much you're making in profit because you figured I'm still growing. You might just dig in a hole. So know your numbers, close your year strong, and then going into 2021, there's going to be lots of opportunities. The backdrop of what's going on right now, probably many of you guys know, there's like all these purchasing consolidators of Amazon brands. As example, we all know of Thrasio, right? Thrasio is a group that raised, I think, 280 million, I believe, close to that realm, in hard cash, to be able to buy Amazon businesses. So if you have good numbers, good books, and you have your own brand and you're doing well, close it. And then in 2021, if you feel like you know what, you can sell it, you can make an exit for a few good $1 million. That's a liquidity event that might change your life forever. So you always have that available, and it's becoming more and more intensified. So all these terrestrial models are being duplicated, and there's billions of dollars heading into this marketplace. So so if you're not aware of this, hopefully this is going to be a wake up call, the awareness stage. Prepare yourself. So just you have an opportunity to sell your Amazon business. It's a viable business and a viable business model that can change your life forever if you do it correctly. So have that in mind. So that's going to intensify in 2021. But beyond that, if you're obviously when you build your business, always build it to last for the next 30 years as much as you can. Worst case, you're going to sell in a few months, in a few years, for a lot of money. Nobody's going to complain. But if you are going to stay in the business, right, make sure look all around where you can trim, where you can make things more efficient. This is not a game for amateurs anymore, really. If you're coming into this as a side hustle or kind of a passion thing, that's great to begin with. But always keep in mind that at some point you're going to have to make this a profession. And the more you're going to have that in mind, you're going to be able to tweak things in your operation just to make it a position to scale and grow and make money. Because once again, you're not you are a for-profit organization. You're not an NPO, which is non-profit organization. So because of that, tune your machine and find it so it really makes the most profitable. And if you ever want to exit, 2021 we're going to have a lot of stories coming up. I know that Thrasios, as they say, they already bought more than 78 brands in the past 2 years. And they paid over 100 million in cash to all these sellers. So a lot of money flowing around in this industry. That's why I think it holds a lot of opportunity.
Yeah, I think you took the words right out of TJ and I's mouth there, and that's what we've noticed in the industry as well. You see, merchants who are able to build viable brands on Amazon, and they don't have to go to direct consumer. They don't have to try and compete. They don't have to, go out and do their own marketing, promote themselves, and they have a marketplace that can do that. And it's been really cool to see so far this year, either brands going public, brands being acquired, and then spinning off to their direct consumer because they have that core customer base. I think one of the ones that TJ really loves to talk about is PharmaPacks that we just saw, who recently raised some money, is now valued over $1 billion, who built themselves on a marketplace and has since moved to a digitally native brand, which is just unprecedented from what we're seeing. So I couldn't agree more that 2021 is going to be a really interesting year to see brands fully develop and what can be incubated on the marketplace.
Yeah.
I think, Yoni, you made the reference before about banks, not even recognizing you as a seller when you wanted to, just get a loan or some sort of line of credit, 5-10 years ago, doing $20 million. Now we have serious money in venture capitalists and other forms coming in to scoop up these businesses. These are some of the smartest people in the world, right, with the most money to spend, and they're seeing the opportunity here. So I think there's still a long, steep growth plan for Amazon, but also multi-channel marketplaces, Walmart, international, whatever it looks like.
Yeah, agreed. Yeah, one thing I just came to realization very, very recently is the fact that even when I was selling, we always had in mind do things outside of Amazon, have a .com or Shopify website, be on eBay, which we did. But Amazon was always the gorilla in the room. But it's really reassuring to know right now for many players out there that it is viable. These venture capitalists, they're paying top dollars, to be able to have a piece in the game, makes it very reassuring that the sellers have invested their time and effort and sweat into the right marketplace, even though they did in other marketplaces, which hopefully will ripen and mature in their time. But Amazon maturing into this position is tremendous news because it's going to change the life of many, hopefully for the best. If you sell your business for millions of dollars, you want to have a new profession or do anything you want to do, that's great. Or just reset. You'll right. see a trend of my first exit, second exit, third exit, and just a business model on its own to raise the brand from 0 to 100 grand or 0 to $1 million in revenue, and then have an EBITDA of 100,000 up to $1 million, and then make multi-million-dollar exits like that. It's if this is gonna happen, I'm not gonna be surprised.
I think the sky's the limit for this year, and with that, Yoni, we want to say thanks so much for joining us here on on the state of e-commerce this week. It's been a really good conversation, and I think we just wrapped it up on the perfect note. So with that, I'd love to turn it over to you for the final word.
And Yoni, in this final word, I would ask that you just tell us a little bit more about Getida and how you guys can help sellers too.
Got it. Okay, so a little bit of Getida. We're a technology company, a data company, and our claim to fame is our ability to help Amazon sellers maximize their available FBA reimbursements. So even if you're doing your own reimbursements or using another provider and you like it, you can keep it. We're gonna come in and allow you to get more, get you really the maximum you can get. We're gonna go back 18 months. And we're gonna scrutinize all the data and audit it, and things that got lost, damaged, destroyed, disappeared, overcharged, and they're not addressed. We're gonna be able to find that and help you out and help you get reimbursed and get money back. Our model is based on PPR, which is pay per recovery only. We don't charge any subscription fee. There's nothing up front. We only charge a fee from the recovery if we're successful. So if we were able to get you $100 back, we're going to charge a 25% fee, which in turn will be $25. So it's based on a win-win proposition. And, we see many sellers that come to us and we help them out. All this excess cash flow helps them a lot. So you can take that cash back and invest in your next launch, in your next product line, in your PPC campaign, your marketing campaign, whatever it is that you need to empower your business. So it really helps out a lot. We audit billions of dollars worth of transactions daily at this point. And I think today we're probably the largest organization in the world dedicated to help Amazon sellers get the most that they're eligible to get. And here's a little bit of a case study for anybody that kind of wants to understand what is the impact on the bottom line of good auditing. Okay, so here we have a case study of an $18 million seller. Okay, where they sold about 300,000 units inventory sold throughout the year, and about 9,000 units got affected. Okay, which is close to 3%, so 2.8% of the inventory got affected in their fulfillment centers. Like I mentioned, things get lost, damaged, destroyed, disappear, stuff like that. So we helped them get back in reimbursements about 151,000. Okay, and this 151,000 in turn boosted the bottom line by about 11%. You see that 10.92? That's the bottom line boost that the auditing, the 151,000 brought into the bottom line. Because if you look over there at the bottom, it's kind of small, but the profit before Getida was 1.3 million, and the 151,000 that we got them extra boosted the profit line by about 11%. Now here I want to put a Q4 alert. This is the end of the year, so if we could, if you sign up to Getida now, for example, we're going to be able to help you get a lot of money back before the end of the year, and hopefully that's going to improve your profit. And this is going to help if you're wearing the hat of a seller. Every dollar that we're going to get you back is going to be worth $3, $4, $5, because you get paid based on your earnings, your EBITDA, your earning before taxes, depreciation, all that good stuff. So every dollar we get back is worth more. But if you just bought an Amazon business and you're going to go back 18 months and they never really audited or got everything that they're supposed to get, you're going to be able to get that back in your pockets and have a better ROI, return on investment. So this is how we help sellers, and we can probably help anybody who comes our way. Once again, there's no cost up front, so it's free to try, and we'll be happy to help anybody who comes our way. I think there's another slide over there with an offer that we prepare for everybody, so you can try it out. All right, so basically the first $1,000 that we're going to get for you in Amazon FBA reimbursements will be absolutely free. So no matter what you're going to do, you're going to have $1,000 extra in your pocket. If you had a good experience, you want to stick around, you can feel free to do so. Or if you want to leave us after getting $1,000, you can do that as well. We're only here to help. So all you got to do is visit Getida.com and put the promo code Payoneer Stimulus. Okay, Payoneer Stimulus. $1,000 is pretty aggressive, and we did it because we know that this year is special from all the other years. And hopefully you can take that $1,000 back into your pocket and really help yourself grow, or maybe invest in the next PPC campaign, whatever it is you need to really empower yourself. So hopefully this helps out.
Absolutely. Thank you, Yoni. I really appreciate your time. For Ben and myself, guys, see you next week.
Take care, everybody. Good luck.